Just about everyone knows that markets go up, they go down, they go all around. But oftentimes when they go down, investors are asking themselves the same question: should I be adding to my losers? And the real answer is, it kind of depends, because we got to be looking at what type of stock it is. We're going to be going through a couple of examples of names that I would be interested in buying in a pullback, and also names that I would not be interested in buying in a pullback, and exactly why. So by the end of this video, at least you'll know how to separate names that you want to buy into and the names that you don't want to buy into. Hey, I'm Luke Downey. Here's another edition of Lessons with Luke. I just want to make you guys a better investor, so make sure to like and subscribe to our YouTube channel if you like this content. So look, here's the deal. The markets are pulling back. A lot of tech names are under pressure. Everybody just keeps selling them. Every time we get a rally, things just start heading lower. And people are worrying about what? Fed taper. They're worrying about inflation. They're worrying about interest rates, all these things to worry about. But of the stocks that are going down, and there's a lot of them, there's probably some diamonds in the rough. How do you choose which ones are worthy of your dollars? Let's go ahead and get into that. All right, so here we are. I am looking at Yahoo Finance. I think it's one of the easiest ways to look at the stock market. And look, you can see today we got the market, it's down. It's one of these nasty days. I actually did some buying today. I love it when markets are down, especially with good stocks. The first stock we're going to be looking at is actually one that I bought years ago, and that is Ford Motor Company. Now look, I pulled up the 6-month chart to show you that this thing is obviously not down on its knees. This is not something that I would be wanting to add to at this point, just because the stock has gapped up so much. But I'm going to tell you why I bought this name years ago. I bought this name, I want to say in like 2017, 2018, back when the stock really wasn't doing too much. And in fact, I started buying it around $11 and change. All right, this is back when the stock was paying a 15-cent dividend. All was nice, it was perfect. And then something started to change with the company. And so that's the first lesson I want you to think about whenever you're wanting to add to a company. Like, why would I invest in Ford, right? It was a dying company, whatever. There were whispers and there was a focus that was happening at Ford years ago where they wanted to transition towards EVs, electric vehicles, okay? Now, Wall Street, oftentimes, they penalize you if you're wanting to make, cost cuts or make a change or anything like that. Remember, years ago, the whole EV space was dominated by basically Tesla, right? And a lot of people didn't believe in it. So the companies that actually were making the investments and doing some of the hard decisions early on, like Ford years ago, actually looked relatively attractive to me. So that's the first thing I want you to think about is the company trying to transition and making measures to make their company better for the future, right? Ford was doing that. So back here, it's very important that you see this. You're buying it at 11. I think I was buying it right here. The stock just kept going lower and lower, right? It took a while for the whole story to play out, okay? Then we got into the pandemic. Everything started to sell off. Ford, obviously, it went through the pain. But the point is why didn't I sell it? Why didn't I get worried about it? Because I believed in the whole transition that they were doing, okay? Management has been guiding that for a long time. And then also you can look at some of these other metrics. The PE ratio was a lot less than 35 back then. And listen, if a company's paying a dividend, it's probably doing okay. Now, Ford is one of these names. It was definitely riskier years ago, but I thought it was worth a bet. And if you can go look over here at the annual revenue and the earnings, you can see the company used to be relatively profitable, right? That's the green lines, that's your revenue. Blue, that's your profits. And then recently, it looks like revenues have started to tail off. And I think that's part of this transition that they're doing, right? They're going into electric. They discontinued a bunch of vehicles that they were going to be making. But ultimately, they were planning for the future. And so when Ford was down on its knees years ago, I thought it made for a good risk reward, especially thinking that, if some of this starts to work and some of this starts to pay off and EV actually is the future, Ford could stand to benefit. Okay. So think about that, as a company is coming down, as it's coming lower, are they reinvesting in their business? Are they going after new technology that actually makes sense? Is the company guiding that that's what's happening? And also like the cost cutting measures are actually starting to take fold, all of that, take hold, excuse me. Those are the questions you want to be thinking about potentially adding to a stock that's pulled back. Now we're going to do one that has actually been pulling back for a very long time, and that is Blackberry. Okay, if you guys know about Blackberry, they used to have these smartphones years ago, and they were very, very popular, but they basically got replaced by Apple iPhone. So let's go ahead and look at a couple of things that are interesting about the charts, right? So on a 1-year basis, the stock has really done nothing, right? On a 5-year basis, the stock has also done nothing. Now look, here's what's interesting. They have 0 PE. That means that they lose money, right? So price to earnings. If you don't have earnings, then you're going to have a non-available. So that is a red flag for me, especially if you're not innovating, right? Now, Blackberry, I don't believe has been innovating. I haven't heard anything about them, and they surely haven't been showing any big money. So they haven't been on my radar for a long time. Okay, so the question is, as it's been low, is this something that you might want to potentially invest in? Well, as you go through that checklist that I was telling you about earlier, are they innovating for the future? I'm not necessarily sure that they are, but let's go ahead and look at the numbers here, and you start to see a drastic picture that is different than what I showed you with Ford. Now, look, the revenue numbers, they've been basically about the same, but look at the losses, okay? Decent earnings here in 2018, lower, lower, much lower. That is a trend that really isn't something that I'm interested in. You do start to see a little bump up here, but ultimately, I don't see anything that gets me super excited about Blackberry. Now listen, Blackberry may be the next winning stock. I have no idea. But the point is like, are they investing in the future? Are they innovating? Are the numbers trending in the right direction on a multi-year basis? Not necessarily. Is there any reason to believe that they are going to be changing what they're doing, that they're going to be creating something new that is for the future? I'm not so sure. And so if I was long Blackberry, and I'm not, this would not be a name that I would be looking to potentially add on a pullback. Now, let's go ahead and go through a stock that actually has pulled back. And we're going to be looking at a company like Nike. Now, full disclosure, I own this one in personal and managed accounts. So I love this name. Okay, it's Nike. All right. 1-year chart, it's pulled back a little bit. On a 6-month chart, it's looking like it's pulling back. So would I want to buy this type of stock on a pullback? And the answer is yes. And I'll go ahead and show you exactly why. One is we know that they do make profits, right? So they got a PE of 39. They also make shoes and they continue to dominate the industry that they are in. Okay, everybody wears Nike shoes. I'm wearing Nike shoes right now. Okay, so the picture hasn't changed. They continue to be top of the mark when it comes to their types of products. So anytime this stock pulls back, I'm actually interested in owning shares. And that's what's really great about finding great stocks that you like. You can really separate the wheat from the chaff. So let's just keep going. Let's look at the numbers here. Much different picture than what we saw in Ford and Blackberry, right? Because the revenues continue to stay really strong. There is a nice trend of earnings. You see that blue there? We go to the quarterly, everything is starting to line up. So it looks relatively predictable. Now, nothing is predictable in finance, but ultimately you can see that this company continues to do right by its investors. Not only that, they continue to raise their dividend, year after year. Just a lot to like. Now, look, couldn't tell you where Nike's going to be in 1 month, 3 months, or a year from now, but most likely 2, 3, 4, 5 years from now, Nike's probably going to be a lot higher. The reason I think that is because their earnings are going to continue to expand because that's what's happened historically. So whenever all stocks are falling, ones that actually make nice profits and they actually have great products and they're also innovative and they have a history of just outperforming, Nike checks that box. Let's go ahead and look on a longer time frame. 5-year chart is beautiful. Just about every single dip that you see, and it doesn't look that big whenever you go on a 5-year chart, but whenever you get up in there, there's a lot of squealing that happens on some of these pullbacks. This little pullback looks a lot like this, looks a lot like this, looks a lot like that. And great stocks, they tend to bounce back furiously, excuse me. I wanted to say fiercely. I'm going to say furiously. I really want to drive that home. A great company like Nike, those are the types of companies you really want to be betting on when the market goes into risk off mode. So look, hopefully this video helps answer your question about should you be buying into certain dips or not. And it really just depends on what the company is all about. Now look, I like to focus on if the company is really trying to transition towards the future, they're actually making cost-cutting measures, and they also have a multi-year plan of getting to the next level. Ford actually was one of those types of companies that I really liked years ago. Again, it was painful. The whole market fell. Ford fell. It didn't play out until years later. I'm just glad that I held. When you look at a company like Blackberry, doesn't look like they're trying to innovate. As far as I can tell, the stock has been range bound for about 1 to 5 years. More importantly, it looks like the losses have just been getting out of control. And for that reason, I'm not really interested in that company. Then you take a real awesome company that a lot of you guys are going to be familiar with, Nike. They just continue to dominate year after year. And that means they're growing their revenues, they're growing their earnings. On this pullback, I think you got to be asking yourself, are there good stocks getting unfairly punished in this market pullback? I think Nike's one of those. And companies that look like Nike, at least on paper, those are the ones you probably want to be adding to. You guys have a great one. I'll see you next time.